Welcome to Conversations with My Real Friends. I'm Jennifer. I'm here with my friend Robert Feldman. Robert is an insurance agent here in California, and we're going to be talking about earthquake insurance. So it's been shaking recently.
Yeah, I
right?
got a few. It's so funny. I've been on the road so much because we, as an insurance wholesaler, we bring carriers in, and I was actually driving to a conference. My wife was home when we had that fun one here in Malibu.
Right.
And I was actually on the phone with her while it was going off. So I was just playing catch up. So we haven't seen anything major in a long time.
Right.
You know, it's the old knock on wood moment.
Yeah.
But it's definitely a concern, obviously, in California.
I was physically here at the office
a
few weeks ago, and I was early, right?
Yeah.
It was like 7-something in the morning, so I was the only one here. And the building, right?
Oh, yeah, it flexes.
Oh, you could hear
flex.
it and feel it. I mean, it wasn't even a big one, and you were like, I noticed.
Yes, it's a definite notice moment.
There's no not noticing.
Exactly.
Right? So if we do have a big one, and someone sustains damage, first of all, if they don't have earthquake insurance, they're not covered, right?
Okay, so in California is very crystal clear. A homeowner's policy covers and specifically excludes earthquake insurance.
Right.
The only time actually there is coverage under a homeowner's policy for earthquake is what's called fire following.
Oh, okay.
So believe it or not, for most policies in California, if an earthquake occurs and there's damage and a fire occurs because of it,
maybe a gas line
and things of that nature. But it's very rare. In the '94 earthquake, there was a few homes that did. Most earthquakes, you won't see fire following.
Right.
So earthquake is 100% the responsibility of an earthquake insurance policy.
Right.
So it's sorry to say a lot of consumers out there still don't have it. A lot of them have looked up and said, you know, the last major earthquake was 1994.
Right.
So you're going 30 years.
Yeah.
Yeah.
That would make me want to get it.
You would think and go, hey, I've got a house and maybe we're a little long on this one.
Right.
So it's the thing I always say to consumers is, and it really gets into more of a investment analysis.
Right.
And this is what I talk about with regular homeowners insurance. I talk about earthquake insurance. Is when someone first buys a house, they're usually very leveraged, over leveraged.
Right.
People make arguments about earthquake because earthquake is not a requirement for a mortgage.
No.
What really concerns me is there are a lot of people that are approaching retirement where they're planning that this house is their asset.
Right. Maybe they're going to do a reverse mortgage.
Or sell their home and move somewhere else or things like that as part of their pension, to build a pension fund.
Right.
And so when you really think about a home is really no different of an investment than a stock or bond.
Right.
It's an investment. People make a lot of money doing rental properties. People invest in properties all the time. The famous line for the real estate world is that's the greatest investment most consumers will ever have is their home. It's always amazing to me when you get into this that you start thinking about it, and I change this on consumers all the time. I talk to them about this, think of it as an investment. So you have $1 million equity in your house. Yeah. So if this wasn't $1 million in a house, but it was $1 million in a stock portfolio, and I'm not your insurance broker, I'm a stock, you know, whatever company, and I had $1 million, what would you be willing to pay to make sure that nothing happens to your risk?
Right.
So sometimes consumers, I would go, if they came to you and said, if for a 1% rate, I can guarantee your stock portfolio of $1 million doesn't lose money.
Right. Consumers
jump on that all day, twice on Sunday.
Right.
But then they get a rate of 0.5% for their insurance.
Right.
And they won't buy earthquake or anything else. It's just wrong mentality, and some consumers I talk to get that, some don't.
Yeah, I mean, I have earthquake insurance on my house, and it's not that expensive.
It's generally not expensive. Some areas are more expensive than others.
Of course.
Actually, now with current market, with homeowners insurance prices, it's become it used to be the higher cost was earthquake, and home were the less. Now in most of California, it's the opposite way.
Oh yeah. It's significantly cheaper than my homeowner's policy,
exactly.
Right? So it's something you just need to know and you're picking your risk, right? And you're free to do that, but know that if it does happen, you're not covered.
Not covered.
So, well, if someone needs to get into, if we've convinced someone to get earthquake insurance.
It's just good information out there. Please make sure you're informed. My email is really simple, robert@wows, WOWS insurance.com. You can look up on the website, Wows Insurance. We're there to help consumers throughout California. We get them to a lot of different brokers and places, but we always can make sure you get there.
Great. So thank you for joining me.
Thank you.
And thank you for joining us for this episode of Conversations with My Real Friends. We'll see you soon.